GM. So today in Q42 talk with a founder, I'm with Jacob, founder of Hermetica, and we are going to discuss about stablecoins and especially stablecoins on Bitcoin. So Bitcoin ecosystem is definitely the thing to watch like for 2025 because of Trump and because of many other things. But I'm very excited to chat about stablecoins too, because I think with all the regulatory stuff we have happening in Europe, in the US with USDT, I think like stablecoins have a bunch of like room to like get some innovations and everything. So thanks for joining us today, Jacob. Do you want to intro yourself and like present a bit like Hermetica?
Yeah, absolutely. Thanks for having me, Julian. Jacob, founder CEO of Hermetica. We're building a Bitcoin-backed yield-bearing stablecoin where we essentially pair spot Bitcoin with a short futures position. We lock in the dollar value of Bitcoin. That's how you can think of it. And then we issue that dollar value on chain as a stablecoin. We generate yield since we're short the futures markets. We're harvesting funding rates, which we pass on to users that stake the stablecoin. So there's a stablecoin, there's a liquid staking token that you receive when you stake the stablecoin that receives funding rate payments every day. And we're fully focused on the Bitcoin ecosystem, meaning we're live on Bitcoin L1 and the Runes protocol. We're live on Bitcoin L2 with stacks, and we're looking to expand to many other Bitcoin L2s. We see the Bitcoin DeFi ecosystem emerging, and we want to provide what we think is one major building block, which is a decentralized or stablecoin outside the fiat system.
So
that's what you
see. So the name of the project is Hermetica. Guys, go follow. You're live at hermetica.fi. And so you are building, as you mentioned, a stablecoin. But it's it sounds easy for you, but it's very complex. So let's get a bit more in detail. So we have, most of people use, I would say, the default peg stablecoins like USDT and USDC. So these are stablecoins, if I'm not mistaken, where basically you have an issuer that is Tether or like Circle, which is backing USDC. And so they are just creating USDC when they receive some dollars in the bank, right? And with the dollar in the bank, they are yielding using bonds, and they are yielding quite hard those like USDT or USDC. And so that's why like Tether, I think, is one of the most profitable like company on earth. So what is the difference between what you are building, USDT and USDC?
Yeah, no, great question. So in my mind, there's really two major buckets of stablecoins in the market today. And they're, on the one side, you have the fiat-backed stablecoins, like you mentioned, USDC, USDT. They're $200 billion in value. They have found really great product market fit. They're traded on basically every major exchange. I use them daily or very often. How they function is essentially there is a bank account, or there's fiat assets like reverse repos, bonds that are held in bank accounts, and then the value of those assets are issued on chain as a stablecoin. They have the major advantage that they're very liquid at this point, but they are tethered, without no pun intended, to the fiat system, right? They are beholden to the US government. They're beholden to the banking system because their assets are in that system.
So the other major, just to clarify that point, when I have USDC, because we have seen it with the depeg of USDC, I think it was in 2022, right? 2022,
23.
Q4. Yeah.
It was March 2023. USDC.
So March 2023. Okay. Oh my God, things go so fast. And basically, so USDC has like those USD in the bank, and if the bank collapse or like the USD collapse, USDC collapse, right? So your counterparty risk is Circle, like the guy who is like creating the stablecoins, because they could still be a fraud, right? And second thing is like you have the bank, and then you have the US dollar. So of course the US dollar is pretty safe, right? One of the safest assets on earth. But okay, so these are like the counterparty risk. And what's about your stablecoin?
Yes, I mean the other part is obviously the yield. As you mentioned, Tether is one of the most profitable companies in the world because they harvest 4 or 5% on their $100 billion float of bonds, and that makes a good business. So the other bucket of stablecoins is crypto collateralized stablecoins. So if you want to have a stablecoin that is a dollar but outside of the fiat system, you have to collateralize it not with fiat assets but with crypto assets. And there's two major approaches that we see in the market today for crypto-backed stablecoins. One is the over-collateralized system, where you essentially lock up a crypto asset in a smart contract, let's say 2-to-1, and then mint the stablecoin against that. MakerDAO has pioneered that with DAI, and there's a number of other projects like Liquidity in the ETH ecosystem. That is a valid approach. It's very decentralized. It works. There's a couple of major drawbacks though to that system. One, it's not very capital efficient. You have to lock up a lot more crypto assets than you can mint stable coins. Second, you are essentially creating leverage. You're creating a liquidation point because you're minting a stable asset against a volatile asset that is a crypto.
So if like the crypto goes down quite a lot, let's say you are backed by Bitcoin, if it goes down, at some point you get liquidated and you have this vicious circle, just to clarify that the first two points you are mentioning, for people. So these make like those stable coins very inefficient because you have to always over collateralize them, which is not efficient. And second thing is like most of the time, these assets can't be yield, And I think that's the true power of like USDT is like you can yield the USDT in bank.
Yes, 100%. So they're not capital efficient. They create a UX, in my opinion, that is not ideal because if you want to hold a stable coin, you don't want to worry about a liquidation point, right? There's two different products wrapped into
100%, yeah.
And as you mentioned, there's no yield. Actually, you have to pay an interest rate to borrow the stable coin. So you actually have negative yield. The other approach in a crypto collateralized system that was the one that we have chosen is to not over collateralize, but instead use the futures markets to hedge out the value of the crypto asset. So we hold Bitcoin and then pair it with the same amount of shorts in the futures market. So essentially you can think of it as Bitcoin, but eliminating all the exposure to price, right? Like since we're short on the futures market and long on the spot market.
So let me explain that a simpler way. So what it means, Jacob, is like you can become like neutral. So what it means is like, let's say you have one Bitcoin in a spot. Then you can short this Bitcoin. And so the one Bitcoin on the future market, you short one Bitcoin. And so you have one Bitcoin spot exposure, one Bitcoin short exposure. And so no matter the price of Bitcoin, you will keep the same dollar value in your account.
That's exactly right. And so if you use the system, you no longer have to over collateralize, right? You can issue the value of the Bitcoin 1-to-1 because you're essentially not exposed to price anymore. And you don't have a liquidation point, right? If you think futures, you usually think liquidations, leverage, but we use futures to essentially eliminate any leverage, eliminate any liquidation point because we're just 1x short, we're just neutral. And on top of that, as a nice cherry on top, essentially, you getting yield because the futures markets basically pay people to provide short liquidity. Since we're short the futures market, we collect what is called the funding rate. And that is quite substantial yield, on average 12% annualized over the last 6 years. And we pass that on to folks that stake the stablecoin. So you have a more efficient system and a yield on top of that. And that's what USDH is.
To go back on that, crypto has a very unique thing that was introduced by BitMEX. I think BitMEX were the first perpetual futures market on crypto. So a future market is what we have, for example, in the US, like for example, for corn, for milk, for dairy, it's basically a virtual contract kind of that you can long or short, So for example, let's say you are a farmer, you have some corn, you could hedge yourself shorting the corn market at a price because then you have spot, So that's why the perpetual market, future market have been created. And in crypto, we have perpetual markets. They are named perpetual because they never stop. You never have like a settlement kind of. So they're always being rolled. And so every 8 hours, when you are longing, most of the time when you are longing, you have to pay a fee that the exchange doesn't collect because most of the time people think like Binance is taking this fee. Binance is not taking the future fee. The funding fee is like basically guys in the trend paying guys against the trend. And so as you are shorting Bitcoin, and that most of the time Bitcoin is going up, I would say, or like if it's neutral, it's 10%, you are being paid to maintain this short position. And so since you have spot that doesn't cost you anything and you are shorting Bitcoin, you are getting those yield. That is 12% annualized in the last 6 years. And even like it went so high, I think it went before like the December, I think the futures annualized rate was like on the funding above 40%, on Bybit, Binance a bit lower. So when you are short, you are being paid 40%. It's just because why do you have this fee? It's because people are so bullish that they are looking to leverage that because they think the EV, so the expected value of the price going higher, is very important. And so they are willing to pay those fees, And you, with your stablecoin, as being neutral, you don't really care because you can't get liquidity because you have Bitcoin in spot. So you are you don't have exposure to the market, you earn this yield. And so every 8 hours you are being paid. And I think BitMEX were the first one to introduce these like perpetual contracts, I think, that are very unique to crypto, because crypto never stops, it's 24/7. So that's very cool. I don't know if I'm explaining it the proper way.
No, you got it right. It's essentially supply and demand of leverage. And since the market wants to be structurally long Bitcoin, there's a demand for long leverage for Bitcoin, and we're essentially providing that long leverage by providing short liquidity. That's one element. The other element that you mentioned is, in a steady state, if it's just 50-50 on a supply demand, there's actually a interest rate baked in that is 10% annualized. So even if there's not a strong demand for leverage, the yield is still 10%, which is essentially the cost of capital baked into the funding rate. So we collect that, we pass that on to our users, and then there's an element to us that is actually a boosted funding rate, because 100% of USDH supply is earning the yield. But if only, let's say, 50% of that supply is staked, that 50% of the supply gets the 100% of the yield. So they get double the yield. So you can, because you can run this trade yourself, obviously on exchanges, but with us, you get actually a better yield.
Yeah, like everybody could be able to replicate the trade you are making. So of course, not a financial advice, be careful with leverage. We are just thinking about it's education here, it's just testing things to understand where the yield is coming from. So I think, because, when I was, when we had the post on Q42 with Hermetica, so many friends, they are still PTSD of UST, because they got wiped out, and it was kind of okay, I don't want to say name because I don't want to say things that are wrong, but, they were scared about that. So now we understand where the yield is coming from and why you can pay this yield, of course. So of course, not a financial advice. There is always counterparty risk. I think that's not the case today to get into those counterparty risks, because they are more institutional and they are a bit harder to understand. But why have you built Hermetica, and what pain are you solving?
Yes, that's a great question. I mean, you mentioned BitMEX, and I used to be very active on BitMEX back in 2017, 2018, in the heydays when it first came online. And back in the days, actually, as a Bitcoiner, you wanted to just hold Bitcoin, and I got into Bitcoin because I think it's the best form of money and really enables freedom, and that's what I'm in for. And so, if you wanted to hold dollars on BitMEX, there were actually no stable coins on BitMEX back in the day. Now they are. But if you wanted to hold a dollar back then, what you would do is exactly what we're doing now with USDH. You would hold Bitcoin spot, and you would go 1x short. And now you had a synthetic dollar position, and that would allow you to actually still hold Bitcoin, but you're not touching any banks, not touching any fiat stable coins, just holding Bitcoin with a futures contract. And that was my go-to in the trading world, right? If I wanted to be out of the market, I would just go 1x short, and that's it. And that was, let's say, the genesis of that idea. Also, Arthur Hayes talked a lot about that in his blog post. He's the founder of BitMEX. But at the end of the day, what I believe we need is a stable dollar asset that is outside the fiat banking system, because we need to have the ability to de-risk from the fiat system, right? If we're creating a decentralized financial system that is outside of that system, and we're still relying with one of the most important assets, because stablecoins are probably the most important asset in a lot of DeFi ecosystems, on that fiat system, how much can we really get away from their control? How much can we really be decentralized? So we needed, in my opinion, a dollar asset that is outside of that world. And the best asset to back a stablecoin with is Bitcoin. Right? It's the strongest, most sound backing asset, and that's what I want to hold. So if I want to hold a dollar, I actually still want to hold Bitcoin, and that's what USDH is. The Bitcoin ecosystem is just emerging, right? Bitcoin DeFi is just at the I'd say first 2 innings, and so we don't see a stablecoin that is being deployed at scale into that ecosystem, and that's what we want to do. We want to add the one major building block, right? If you look at stablecoins, they're basically 1/2 of every transactions on Ethereum, on Solana.
Yeah, they are huge. They are huge.
They have massive product market fit because people want to hold dollars, obviously, because they denominate their portfolios in dollars. The whole world wants to have dollars.
Because for example, I had friends, they are in smaller companies, some smaller countries, for example, in South Asia, you don't want to rely on the banking system. And so they are my counterparty risk being in a bank is way, way, way bigger than just having USDT, for example, on Solana or on Ethereum, especially now Circle is audited company. So I'm not an expert on that, but I think the risk is very, very, very limited. And yeah, I really like what you are mentioning here. And disclaimer, guys, I'm an investor in your company. But when we started to chat, I think the first thing I told you is like this BitMEX time where people like some whales were, or like some guys were doing some stablecoin on BitMEX because they don't want it to like have an exposure to any other stablecoins. And I remember a few times when we had like some crazy Tether FUD, so USDT were like it going to bankrupt or go to zero. We had all those guys on BitMEX trying to hedge, and I did it myself, back in the time. And it's pretty pain. I would say it's not hard to do, but it's pretty painful to do, to maintain and like to follow. And I worked in the market maker where at some point they had like some stress test and they had to hedge, part of the portfolio using that to get like a stable coins that was not like USDC or USDT because there were some rumors about a few things and everything like. And yeah, so that's why I think you have a very strong product market fit in first that this like I would say decentralization being like pegged to like kind of like it's not pegged to the dollar to the Bitcoin, but like having this like Bitcoin narrative is very strong. And then the third thing is like stable coins. We all use stable coins daily, and they haven't moved quite much since I would say 4 years now. And so that's very cool. And you don't get the yield. That's the thing. It's like Tether is becoming very rich. Circle is a very profitable company, I think. And we don't get it. So that's very cool.
I mean, that's the other part, right? Like one is to have the ability to have a dollar outside the fiat system. I'm not saying Tether is going to collapse or Circle is going to collapse. I just want to provide that option that people can go into another dollar if they want to, right? And I think that's going to become more and more important. The other element is yield, right? If you hold a dollar itself, we all know that inflation is not 2 or 3%. It's probably more in the 10%, depending also on the years, obviously. And so if you just hold a dollar, you're eroding your wealth. But if you can add a very significant yield to that, you can offset inflation essentially, right? And that is maybe less important for folks in the crypto system right now because we have a lot of opportunities, especially in the bull market, to make money. But if you coming back to your example, if you're somebody in the Philippines or in Africa and you can now hold a dollar, which is a lot better than your fiat currency in your bank account, but you're still getting inflated away, right? You don't have access to U.S. government treasuries or savings account. And so what we can offer them is a crypto-backed yield that actually they can access today, that everybody in the world can access, except Americans actually, and they can offset their inflation.
Okay, that's very cool. And then at the beginning of the interview, you mentioned that of course you are very close to Bitcoin, because of the mechanism of your stablecoin. But why have you chosen the Bitcoin ecosystem? You mentioned stacks. Can you mention like other things? Why the Bitcoin ecosystem?
Yeah, I mean, I'm a Bitcoiner at heart. I got into crypto through Bitcoin in 2017 because I saw Bitcoin as the most decentralized, really the only fully decentralized blockchain, in my opinion. And I think that is really important as the current system erodes and the trust in financial institution goes lower. I think we're in a need of a financial system that is fully decentralized. And how that is done is that we basically have a settlement layer that is decentralized and then build on top of that a financial system that can offer products and services that are very attractive to folks that all settle back into a decentralized base layer. And that is Bitcoin for me. I think that I think we need to do this. I think that is very important to have the option to act in a financial system that is actually settled into Bitcoin. And so if we need to do this, I think it's been historically very difficult because Bitcoin is so rigid and not expressive. But it is changing now, and it's been changing over the last, I would say, 2 years, where there's now the ability, technology is coming online, very smart teams building the technology to actually have smart contract capabilities and roll-ups and settlement solutions that actually bring data into Bitcoin. So you have security assurances of Bitcoin in other ecosystems. And that's what I'm really excited about because of the prospects of what that can do to freedom, essentially. And that's why we're building on Bitcoin.
Okay, that's pretty cool. And you have a point system live on your app, right? Why would people use your stablecoin? And let's say I'm a Bitcoin OG, or like I want to support Bitcoin, I want to support Hermetica. What should I do?
Yes, great question. So we're live on Runes. So if you're a Bitcoin OG and just want to use Bitcoin, you can actually hold USDH in your Bitcoin wallet just by signing Bitcoin transactions on the Rune protocol. You can go to Magic Eden, .swap, or just come to our website, hermetica.fi, and then go to buy, and we'll route you to the right places where you can actually acquire USDH. And then you can always come to our website and stake it for the yield. If you are more into L2s, we're live on Stacks as the first one. There you can also buy it on the major decentralized exchanges, Velar, Bitflow, and then come to our website and stake it for the yield. We have a point system that essentially incentivizes folks to deploy USDH into the parts of the ecosystems that are most important for us, for the ecosystem or for the product. And that is providing LP into Velar or Bitflow, providing LP into money markets like Zest, so folks can borrow the USDH. And so you can come to our website, check out I think it's the points tab, and you get an overview of what the incentives are to do specific actions. And you'll get your points delivered to you every day. And then there's going to be obviously nice perks for folks that have points down the road.
Okay, that's pretty cool. So guys, go follow Hermetica on Twitter. Feel free to ask any question below if you have more like in depth about like, I don't know, counterparty risk, like the boring part, I would say. That was like a very cool insight about Hermetica. I have a few questions for you, like more like at a personal level. What are the things you are excited for 2025? Could be Bitcoin related or not, just to have your take on that.
Yeah, 2025, I think is going to be a super exciting year. I think we're all waiting for the new administration in the US to come in and show us where the puck is going. I think there's going to be a lot of new, exciting regulatory changes that is going to allow us to do things that we might not have been able to do in the past. And that, as a builder, obviously, I'm super excited about. On the Bitcoin side, I'm really excited about very advanced ZK rollup, optimistic rollups actually coming live into production in this year. I think that we have Alpen Labs, we have Citrea. These kind of folks are really experienced builders, really great teams that are working on rollups on Bitcoin, believe it or not, that don't need an upgrade to Bitcoin. And it's going to probably go live in Q1 or Q2. So that I'm really excited about. We're looking into actually deploying there and being part of that, because I think that is a technology that is on par with rollup or L2s on Ethereum. Those are the main. That's what I'm mainly excited about.
Okay, that's very cool. I think like the Bitcoin ecosystem like is really a sleeping giant. We have so many project building, and I think it just take a bit more time on the Bitcoin ecosystem because founders are a bit different. Like they are not really. I would say it's not like they're not a big fan of marketing, but they are not like they are like building. So they don't want to like surf any meta and like have the thing.
Yeah. Also, okay, Bitcoin is slower, right? Like it takes more time to develop on Bitcoin. One is because of the block times, but also because it's just complicated to make more complex things work on Bitcoin.
Yeah, definitely. But as it is, on Solana, on Solana it's so hard because the chain goes fast. But in the end, they are building like some very cool apps. I think my latest question would be like, VC-backed projects. So you are a VC-backed project because to build what you have built, you need funding. So VC-backed projects have been pointed out last year. So just like for the people, to understand, why have you raised money and why do you think like VC matters? Have you been able to do that without VC? And what's your take on that?
Yeah, it's a great question. I mean, generally, it's possible to do it without VC if you're like a really strong builder and you actually have ability to write code and can work crazy hours, I think. And actually, you have a very long time horizon, so it'll take a lot more time. I see VC money as an accelerator at the end of the day, and to make things faster and bring more talent in and attract the kind of people that can condense the timeline in like half it or make it even faster. That's why we raised money. Also, there is, believe it or not, VCs that are not just money, and they can actually help you with a lot more than just giving you a check. A lot of them just give you a check, and that's totally fine, obviously, but there are strategic partners that can help you on the go-to-market side, on the strategic side, on the liquidity side.
Doing some introductions, introducing partners.
Exactly, yeah, exactly. Or just being sparring partner and help you think through ways to do the product better, how to go to market better. And or give feedback like you have done numerous times, and it's super helpful because as a builder, you like just laser focused in the trenches working and building, and you don't necessarily have the big picture to like create the networks and or see other things that are going on in the ecosystem. So I would say the right VCs are actually really great partners, and then having the money to accelerate the timeline is very helpful.
Okay, so if I recap, VC are a way to like build some, like buy some growth, like you go faster. And second thing is like most of people like underestimate how some guys like just have so much added value capital, you know. And you know, we see it like every day. You can do like just by one intro, one feedback, one thing, you just save so much time and so much energy. And I see more and more projects that are, you know, really focused on that, you know, on the fundraising side of things, because I think it's getting a bit more competitive when in terms of VC, you know, because there is a lot of money in the VC side of things, very few very good projects, and so you have like this like demand and offer that is always changing. Thanks a lot for your time, bro. I really appreciate it. I think we went in depth because you see, like, it's not that easy. We went in depth on like on the things you are building. Very excited to see what's coming, and especially, you know, a bit frustrating to only use USDT and USDC, and so I think it will be a very cool one. And I don't know if you have like just an ending note or something, feel free. Otherwise, we'll just like stop the
thanks for having me. It's always a pleasure to jam, and thanks for your support in general. I would say, folks, come check us out. We're live, hermetica.fi. Sign up to our email list. We send out actually updates every week where what we're doing, what's going on in the Bitcoin ecosystem. So hermetica.fi/subscribe. You can put in your email and you'll get an update every week. And then come just say hi. I'm Jacob_BTC on X. So just drop me a DM. Let me know what you think. We're building for the community, and I'm always keen to get as much feedback as possible. And yeah, we're early. Let's do it.
Nice. I love that. Community comes first, you know. Cheers, guys.
Absolutely.